Hi friends, let's take a look at Link. And Link so far, whilst it's had this upward surge in price action, has managed to come up to where we kind of pointed out before in terms of the key area. Now, we are above it right now, and that's good. What does that mean? Well, it doesn't mean that we've recovered as yet. We're just on the road to recovery. What do you mean by that, Rocky? Well, quite simply that we're here where the 236 is. Now, I appreciate there's a lot of noise here on the charts. Let me just get rid of a couple of these lines. Like, for instance, those two zones just there, which of course were the key zones for us over the last wee while. As you can see on the 24-hour time frame, maybe even more particularly, it's obvious, right? We nailed the technical analysis. I don't think I need to give myself any more kudos than that. I can also get rid of my text and several other brush marks along the way. Then I can hide these things. Hide, and clean up the chart so that we get something to look at in terms of where we've come from recently. Now, this is the Fibonacci that I wanted to point out, the one that's currently flashing on screen. And this Fibonacci retracement is from those highs over there on the 1st of September down to those lows over there on the 23rd of September. And we can see that the 236 of crucial importance comes in there at 93,564. And checking with the current prices, you can see that we're at 94,000 currently, and we're just above the 21 EMA, which is very, very good for us. Now, I did hide a parallel channel, which is an extension to this pitchfork. That's fine. Really, essentially, what we're looking at is whether or not we can make it back into this pitchfork. If we do so, then, of course, we want to take out the 55 EMA and our previous highs and actually achieve 100K round number. Is that possible? It most certainly is. And if we were to do that, then the three targets thereafter would have to be 109,000, 123,000, and 135,000 in terms of your three upward side targets. Now, there is, of course, this parallel, this rising wedge here, which has measured moves off the back of it. And I could, of course, just pop them back on for you to see. So there's one of the targets and there's another one of the targets, and they really come in at 125 and 140K. So same sort of targets we were speaking about a second ago. Of course, off the back of this channel, or indeed wedge, which is how we had it positioned before, or whatever. Doesn't really matter. So yes, that is kind of what we're looking at here in terms of this thing. So therefore, can we push past this zone in terms of the RSI, or will this ultimately turn out to be bearish divergence? Looking at this and looking at this, and then comparing these highs on the 27th of September up to the 1st of August on the charts, you can see here on the 27th of September and now October, sorry, not August, October, where we can then see the prices currently coming in at. Failure to achieve closes above this 21 EMA and movement beyond and up to the 55 EMA and beyond this previous high would signal this area as perhaps being hidden bearish divergence, in which case you could then continue to go down the way, and of course that parallel channel could simply be redrawn in here to accommodate for that price action. This is already an inside pitchfork. What we could be looking to as well, if things really kind of evolve over time, would be for this to be, if this does turn out to be a low, having come down and had a retest of the 233 simple moving or exponential moving average on the daily time frame, we could be looking towards something like this in terms of just our next sort of series of targets and everything else. But don't need to get too carried away with that. In fact, I'm going to hide all of that sort of stuff off for us just now, and instead as well, we've already spoken about the moving averages here. Instead, I want to point out that this key area that we're speaking about before is obviously a key zone for us, given that this is where the 618 was before in here. So, be very aware of that, as you can see quite clearly in that area. And that, again, is why that's important. And that's their key zone for us if we're going to be looking at things from now on in terms of being bullish. And of course, in terms of being bearish, this here has got to be our key zone down below, where we have that 786 over there. Now, of course, along the way, there's, in terms of the immediacy of things, we've got this 236. And that kind of is like clearer in terms of the importance of that when we look at it on the 1 hour time frame. As we can see, if I just extend this over, so the 236 comes over to where the current prices are. Give me this 236. Sorry, I hid it behind my green lines I just drew in there now. extend that over, then you can see that this is this is the immediacy in terms of the what we need to achieve in order to be able to look towards these higher targets. And those higher targets then come back in at where we kind of were speaking a bit before, with the top side 618 retracement coming in there at 130k, between 125 and 130 sort of zones. But this is the starting point for us if we want to get bullish on it and talk about a recovery being underway. Now, to say that things like, because I read an article that's posted in the crypto news discussion forum in the Discord about how these things have recovered. And I would say that they haven't recovered really until such times as we've really taken out things like the 786 here on this Fibonacci retracement. And why I say that, of course, is because that lines up with this 236 Fibonacci retracement on the left. And that is, of course, the negative, the trend, the counter, the uptrend. So this is drawn in using the upward trend here to form this Fibonacci. And of course, then movements down here have been characterized by the fact that we're below this key inflection point in the market. So that's where the 786 is. And that is when we could start to say, check with recovery. Of course, we're looking up to that 143k area at that point. And then just to remind people about the pitchfork, that comes in around those zones. But if I just take it, so I'm always doing that. Forgetting to, I've got the brush tool on. If I just take this back to where we had it before, where was it we had it before? Just over here. Then change it to inside. Then, of course, that lines up perfectly with our upper line that we're looking at here and that zone, and that's what we need to see kind of happening for us. And this is, of course, the same story really with regards to the dollar pairing. But we've got a couple of nuances about it. I'm not going to go through all of that information all over again. It's the same thing. Are we going to be able to achieve the ultra bullishness of going in here and going higher with the RSI into what is known as the overbought territory, which of course is the bullish, really extreme bullish territory? Would be a far wiser way of looking at it in terms of that small term time frame. Or will we see a pullback to give us the strength? And if we did see a pullback, this is the 1 hour time frame we're looking at right now, we have to look towards this parallel channel to operate as support, finding resistance in here at this box, as we've spoken about so many times. So we already know all of the chat. We are looking with targets up, and bearing in mind that targets up above, if this rise and fallen wedge were to be true, would be, of course, around about $14 and $16. But let's just kind of check in with our pals up here in the higher time frames and see how things are going. So the 4 hour time frame shows you the strength of trend towards the top sides. Just zooming back in so you can actually see it with a nice and tasty cross here and everything looking pretty good with regards to that. 24 hour time frame is building up to perhaps being able to do the same thing. Bearing in mind, though, pardon me, that we've not actually undone this yet. So be aware. Okay. The 236 over here is where we're actually finding the prices currently being resisted, lines up perfectly with that. So of course, this is the key area for us. And this is, not yet in the positive territory yet. So we need to see this pushing on the way. We are, of course, ticked towards the top side in the terms of the stochastics, and the RSI has taken out the neutral line. However, if we come back down and retest this zone here, that would not be too much of a surprise. And I suppose in terms of like a zone here to be aware of, we need to be aware of this sort of territory here with regards to whether or not we would come back down below this. Coming back down below this territory is quite poor, but that would obviously be us undoing what you could then perceive to be the neckline. Now, if I just sort of zoom in on where we are here, the neckline of this inverted head and shoulders we spoke about in the recent times on our price action on our channel here. So this is why people subscribe. If you've not subscribed yet already, then I don't know what to tell you. But I mean, we have identified all these things already, and look at that. That's a perfect inverted head and shoulders here on this time frame from the 2nd of September all the way over to the 11th of August. So we're talking about a nice 40-day period, and then we've kind of come past this point. So can we succeed and do that, or will we see another sort of second try at it again? In this area, we were talking about the emergence of the head and shoulders here and saying maybe we need to have a right hand shoulder coming in, and of course this then could conceivably have been that zone for us, having got this as your inverted head and shoulders in terms of the price action itself. And this is being your key area to look to. That is what would be more like a recovery than what we're seeing in terms of just this price action here. That is what you call excellent technical analysis, by the by. In terms of the Ethereum pairing, we're also suffering here with the resistance up above our head of the 236, the key area that we've been speaking about for the longest time. And as you can see with the price action, when I take my measuring stick away here, that we've come in here and perfectly achieved our goals in terms of breaking out of this channel here with regards to where we could come to. And while we didn't quite come up as high as this 382 that's over here. So 382, right? Yeah, it is. We came up to the 236 just here at 28. Now, of course, that kind of gives you a clear area of, where we need to see the prices achieve better than in right there. If they get supported in this, on this 236 here, that's, of course, quite good. And then, of course, then we could see potential for movements towards the upside thereafter. If I just draw in a sort of arrow after this X, after this horizontal line showing us where we are. And that is going to be of key consideration for us in the near future if we want to take out targets such as the 382, the 50, and the 618 golden pockets here. Now, I could just read the numbers out to you, but I could just encourage you to go ahead, pick up the Fibonacci retracement tool here and draw in from the highs that we had over there on the 16th of August down to the lows that we had over here on the 23rd of September. You'd have that same one on your charts. Bear in mind the key areas down at the 236 and all that, and you'd be able to do this at home and therefore be your own boss with regards to all of that. Looking at a swing failure point here of the neutral line again as well, and can we then push on past certain things in order to then actually allow this to cross? If it does cross at the minute, it's still crossing under the auspices of the Aegis, if you like, or whatever, for the bears in terms of this being chop land. So we've not really recovered as yet, and that's what I'm talking about with regards to this. My God, we've done such a good job with technical analysis recently. Don't know why the channel doesn't have more subscribers. But not going to be on about it. Just know that it's, if that's, if that refers to you, then you could go ahead and do that. And if it refers to your friends who are into crypto but haven't subscribed, you could tell them about the channel. They'd benefit hugely. See you next time, though. Thanks so much for tuning in. I really do appreciate it. If you want to join me on Monday for a discussion in the voice chat and to share your opinions about this book, which I'm going to be reading over the weekend, if you want to, that's not the be all and end all. That's just something that I'm bringing to the table this week. That Peter highlighted to me. Then there you go. That'd be cool. Catch you next time. Thanks so much for tuning in. I'll see you on Monday.